Why this conversation matters. Bitcoin is no longer just a topic for tech enthusiasts. It's no longer something only early adopters talk about. Today, Bitcoin sits at the intersection of finance, energy, geopolitics, and technology. And yet most people still misunderstand it, especially mining. This video is not about hype. It's about understanding what Bitcoin really is, what mining actually does, the real risks involved, and why learning this before it becomes mainstream knowledge may be more important than most people realize. Bitcoin as a new monetary framework. Bitcoin is often treated like an investment product, but at its core it's a monetary protocol. It introduces a system where rules are fixed, supply is limited, trust is replaced by verification. Unlike traditional currencies, Bitcoin does not rely on central banks, political decisions, or monetary policy committees. The supply is mathematically capped at 21 million coins, a feature that fundamentally changes how value behaves over time. Inflation, fiat currency, and why Bitcoin exists. Modern financial systems depend on money creation. Inflation isn't accidental, it's structural. Over time, this reduces purchasing power. Bitcoin was created as a response to that reality. That doesn't make Bitcoin perfect, but it introduces an alternative where scarcity is enforced by code, not promises. This is why many see Bitcoin not as a replacement for money, but as a hedge against long-term monetary dilution. What Bitcoin mining actually does. Mining is one of the most misunderstood parts of Bitcoin. It is not just creating coins. Mining secures the network. It verifies transactions. It prevents fraud and double spending. Miners compete using computational power to solve cryptographic problems. In return, they are rewarded. But they also incur real-world costs. Mining is an economic system. Mining converts electricity, hardware, capital, into network security. This cost is not a floss, it's a feature. Because attacking Bitcoin would require massive real-world resources, the network remains highly resistant to manipulation. From an economic perspective, mining anchors a digital system to physical reality. Positive aspects of Bitcoin. Let's talk about the positives, clearly and honestly. Bitcoin is global and open. It runs 24/7 with no intermediaries. Transactions cannot be censored easily. Supply is transparent and predictable. Over long periods, Bitcoin has demonstrated strong performance, but with extreme volatility along the way. Patience, not emotion, has historically been rewarded. Mining supports decentralization. Instead of trusting a single authority, Bitcoin relies on thousands of independent participants. In some regions, mining has incentivized renewable energy projects, reduced wasted energy, strengthened local infrastructure. Mining is not just technical, it's strategic. The negative side, real risks. Now the downsides, because ignoring them is dangerous. Bitcoin is highly volatile. Mining requires significant upfront investment. Energy costs can destroy profitability. Regulations may change suddenly. Not all miners survive long-term. Many failures in crypto don't come from Bitcoin itself, but from unrealistic expectations and poor risk management. Mining is not passive income. Mining is often marketed as easy money. In reality, it's a business. It requires cost analysis, energy strategy, hardware efficiency, long-term planning. As difficulty increases, margins compress. Only disciplined operators remain competitive. Bitcoin cycles in the halving. Bitcoin follows cycles. Approximately every 4 years, the halving cuts miner rewards in half. This increases scarcity over time. Historically, major adoption waves followed periods of low attention, not peak excitement. Understanding cycles matters more than chasing headlines. Why learning early matters. Being early doesn't mean buying blindly. It means understanding the system, learning the risks, seeing how institutions behave, repairing before competition intensifies. Many people don't miss Bitcoin because it's too late. They miss it because they wait until understanding becomes unavoidable. Final thoughts, the bigger picture. Bitcoin and mining are not shortcuts to wealth. They represent a shift in how value, energy, and trust interact. Whether someone participates or not, this system is influencing finance globally. In a rapidly changing world, ignorance is often more expensive than risk. Thanks for watching. Here we focus on understanding systems, managing risk, and thinking long-term because markets don't reward emotions, they reward discipline. This is Elite Financial Minds. Think deeper, invest smarter, and stay disciplined.